Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to follow on after the last couple, where first we talked about our bear case scenario, then we talked about our bull case scenario, and given what's going on in the world right now, so the big shifts in D.C. and Washington, and honestly, the media coverage, which can get very dramatic, people tend to focus on those tails. Hey, things are going to get bad, or things are going to get really good. And I want to take the opportunity in this episode basically to focus back on our base case. So our base case, is for a modestly positive environment, maybe a slight slowdown in the economy, but not a recession. Low relative to the last couple of years, lower equity returns, right around the level of our long-term expected average. So still a pretty good environment. But, given the drama of everything that's going on, people are really focused on these more tail risks. And, that's fine. It's important to think about that. But we remain of the view that our base case is the most likely scenario to unfold. And specifically then what I want to get into is sort of this contrast between the noise of coverage, the media, maybe some other information, and then the actual data that we're seeing. So let's jump into it. Let's start with January retail sales. So retail sales were down a little more than expected in January, but that came after a pretty healthy holiday season, and it came coincident with, driven potentially by pretty bad weather and the very unfortunate fires in Los Angeles. And the way I would think about it is, even looking back, they actually increased the December numbers. So it's sort of like this slowdown, but the year-over-year increase was basically 4%, pretty good. But again, the coverage of that's just that one change is kind of negative. We don't think the data is quite that negative. When it comes to consumer confidence, kind of a similar pattern, meaning that in the wake of the election, confidence and sentiment type measures really jumped up. People got sort of optimistic about, this change and et cetera. And the reality is that that's come down a little bit. So the Michigan Consumer Confidence report, for example, in February came down to 64.7 from a 67.8. And actually people's worries about inflation have kicked up. The view that over the next year, individuals think that inflation is going to be up over 4%, specific number 4.3%. Up from 3.3% in January. And so, I think it's fair to say, hey, with these sort of worries about the tail, that people are a little bit concerned about what's going on. But honestly, the other thing, and we're probably going to dig into this in a future episode, that we're seeing is real polarization between the parties. So think of it as three cohorts. There's Republicans, Democrats, and independents, I think is the way the data is pulled. And, the bottom line is Republicans are really optimistic, Democrats are really pessimistic, and independents are kind of in the middle. And so, again, we'll dig into that data. But net, it's sort of like, numbers have fallen a little bit, but off of pretty strong levels. Now, the other thing then to sort of take a look at is, well, wait a minute, how are companies doing, right? So in this environment, what's happening? And again, when we look at things like the NFIB Small Business Survey, I think it is, their big jump in optimism in the wake of the 2024 election was the same kind of thing that happened in the wake of Trump's win in 2016. And so anyway, basically businesses are going along. When it comes to the consumer, so consumer discretionary companies had much better than expected earnings in the fourth quarter. The estimate was for about 12%, 11.9%, and that was as of the end of September last year. That's sort of what people were thinking for the fourth quarter. It ended up being almost 30%, 28.8%, at least for those companies. We've got 88% of the companies reporting so far. But that's a big delta. That's saying the consumer has been engaged and businesses are benefiting from that. Now, when we look out to the future, essentially, there is, again, a slowdown. So there's an expectation that earnings growth for the consumer will be consumer discretionary companies will be a little bit above 6%. Again, think of it in terms of a little bit above long-term averages. Now, one of the things about companies and earnings is that we're able to sort of check out what executives are saying. I'll just give you a few quotes. So Walmart, quote, "Our outlook assumes a relatively stable macroeconomic environment, but acknowledges that there are still uncertainties related to consumer behavior," end quote. Airbnb, "The consumer, and in particular the North American consumer, has been strong, and in particular has been strong in terms of contemplating future travel," end quote. Delta, quote, real short, quote, "The U.S. consumer is financially healthy," end quote. Now, one of the reasons for that healthiness, being healthy, is a tight labor market. So think of it as, jobs are a little bit easier to get. Employers have to bid wages up to get those folks. So wage growth for last year is up 4.1%. Unemployment's pretty low, 4%. And so basically we have a kind of a tight labor market that on the margin is positive for the consumer. Now, finally, when it comes to the broader business environment, another way to kind of gauge where things are headed is to look at the consensus earning growth for the broader indices. So the one I'll reference is the S&P 500. Basically, growth is expected in 2025 at just shy of 12%, 11.8%. And that's a good number, and it's well above long-term averages. So again, I would just sort of close by saying, hey, we're seeing a lot of noise. We have to be mindful of the negative potential, the potential for positive outcomes, but our base case remains sort of our scenario that we think has the highest chance of unfolding over the coming year. And so a lot of the effort is to kind of understand what the media and others are saying in terms of the coverage, but try to look through the noise to the data and try to understand, okay, when we're moving through time, what is the data telling us? And so far, there's sort of numbers that have fallen a little bit off of highs, but those are off of strong highs. So we remain, again, cautiously optimistic, sort of with a muted positive view for 2025. So listen, thank you so much for listening to this episode, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.